Welcome back to the Daily Drum on WHUR and Sirius XM Channel 141. This is the Inside segment. I'm Harold Fisher. It could happen here. The California wildfires have many of us wondering how best to protect our homes and other valuables from a possible natural disaster. Do you have all of your documents in the right place? Are your insurance premiums enough to handle the what ifs? And even if it doesn't happen to you, why are your insurance policies going through the roof? We're going to drill down on all of those questions and more. My guest is Joy Hachette. She is Deputy Commissioner at the Maryland Insurance Administration. Joy, always good to have you on the program. I appreciate you spending some time with us.
Thank you so much for inviting me.
Sure thing. Before I get into the questions, let me share just a couple of fast facts. We know that wind damage is the most common cause of homeowners insurance claims, accounting for about a quarter of all claims. Fire is the second most common cause of claims, about 23% of all claim costs. Many homeowners are underinsured or uninsured. We have to definitely talk about that. And of course, a lot of homeowners do not have a full inventory of their valuable belongings. Before I even ask you about how to better protect your home and your belongings as it relates to insurance, when you look at what has been happening over the past week in Southern California, what really comes to mind from your when you put on your insurance administrator hat?
So, the first and primary thing that I think about when I read or watch on television what's going on in California, and I want to start out with California and its terrain and its insurance market is very different than what is happening here in Maryland.
How
But
so?
because when you look at the huge fires they have, it's not to say that we don't have wildfires here in Maryland, because we do. But the terrain in California is very different. The long term drought that they've had in California is very different. But more importantly, the insurance market itself is very different. While here in Maryland, affordability of insurance is definitely a big issue, in California, a part of their issue is availability. A lot of the homes in California are not insured by our traditional companies. They're insured by a state-run program, because a lot of the insurance companies, because of all of the risks, the fires that they've had over the last years and years, because this isn't the first time that a major fire like this has happened. And because of this, a lot of the insurance companies have said, not a risk we want here in California. So it's harder to get a company to even accept certain risks. So the market here in Maryland is a bit different. And it's always important to know and understand that. Now, that said, there are several things that homeowners here in Maryland should do in general in terms of their insurance. First of all, as you mentioned, even having a homeowner's insurance policy. A lot of people, once they pay off their homes, they say, oh, I don't have a loan anymore, so I'm going to drop my insurance. because I'm not required to have it. Because my lender said, when I had my loan, my lender said, you got to have it. Now I don't have a lender, don't need it. Well, if you don't have your homeowner's insurance at all, and the fire burns your home down, who's going to pay to replace your home?
Mm-hmm.
Don't depend on the federal government. Don't depend on the state. And these other nonprofits are not going to pay to rebuild your home. So the first thing that you should do is make sure that you have a homeowner's insurance policy. Then you need to make sure you understand what that policy covers and what it excludes. And you need to understand what the deductible is. Mm-hmm. When I first started doing this some 30 years ago, most people had a flat dollar amount deductible, a $500 or $1,000 deductible. A lot of insurance companies now have what's called a percentage deductible. And that means that if you have a loss, you pay a percentage of how much your home is insured for. Not how much the claim is, but how much your home is insured for. So if you have a $300,000 home and you have a 10% deductible, that means before the insurance company pays $1, you have to pay $30,000.
Oh my goodness.
The time to learn that is not when you have a claim. You need to know that up front. So the first thing, know what your policy covers and what it doesn't cover. Second thing, know what your deductible is. Also, when it comes to deductibles, you may have on the same policy different deductibles for different things. So there may be one deductible that you have to pay if there's wind damage. There may be a totally different deductible for your roof. And while we're talking about roofs, some insurance policies pay what's called an actual cash value, which means they depreciate how much they're going to pay. Some companies will say, if your roof is 15 years old, we only will pay 50% of the replacement. So it's important to know what's excluded, what your deductible is, and if there are any multiple deductibles, including deductibles on your roof. Now, you also mentioned having an inventory.
Right.
That is critical because if you have a fire and you lose everything, I can tell you how many televisions I have, and I can probably tell you how many computers I have. But can I tell you in my closet what I have? Clothes are expensive. Handbags and shoes are expensive. All of that adds up. So you need to do that personal property inventory. And as people say, well, I'm not going to sit down and write all that down. Don't expect you to. Take that wonderful little phone and take a video. Don't keep that in your home. Store it in the cloud. Store it in a safe deposit box. So if you have that fire, you have a way to get to that inventory. So those are the real basics.
It's interesting when you were talking about what was happening in California. I'm reminded of that, that song, "It Never Rains in Southern California." Well, that was one of the kind of realities is that prior to this, Southern California had not had any appreciable rain since May. That's a really, really long time for a region to go without significant rainfall. And as you said, just as recently as last year in Maryland and in other parts of this region, we've had drought warnings. But we've had some brush fires, certainly, but the mid-Atlantic is humid, and which would certainly contribute to the difficulty of seeing the same kind of thing that we are seeing in California. But with that said, gosh, and there are just so many questions to your point about private insurance companies. We know, for example, that State Farm made a lot of news in 2023 saying that they were dropping or not accepting new homeowners insurance applications in California. And then just last year said it would stop covering 72,000 homes across the state because of the wildfire risks. And so I guess my question is, if you are a homeowner and your insurance company says that there is a natural disaster risk, wildfire, severe flooding, hurricane, tornado, locusts, whatever it happens to be, do they send you a letter? I'm assuming that that's what they would do, number one. And number two, once you get that letter, what do you do? How much time do you have to find another insurer?
So there are two different ways that a company can stop writing, either you or in general. First of all, let's talk about in general. So State Farm's decision on particular areas to no longer write. If they were to decide to do that, I can't speak to California because I don't know the laws
right,
there.
Exactly.
But here in Maryland,
yeah,
if a company were to say the risk is too much, we no longer want to write, they would have to file something called a plan of withdrawal. We would review that plan to make sure it meets certain statutory requirements, and then they would have to give notice under the law to let people know we're withdrawing. And there are companies that may withdraw either an entire, they don't want to write in the state anymore, they don't want to write in a particular area. We review those. Sometimes we say that's fine. Sometimes we say, well, you need to do X, Y, and Z. Sometimes companies merely want to, when they say withdraw, they want to stop in a particular company and turn it over to a different company.
Hold that point, Joy, if I may.
Okay.
Because I do need to take a break, but we will pick up on the other side. We are going to, as I said, we're going to take a quick break. But don't forget, you can hear this and every edition of the Daily Drum Insight segment via podcast on WHUR.com. The original Quiet Storm with Raheem Devon is coming up next on WHUR. I'm Harold Fisher. This conversation about natural disasters and your insurance continues on Sirius XM channel 141 and 96.3 HD2 in just a few seconds. Welcome back to the Daily Drum on Sirius XM channel 141. I'm Harold Fisher. We continue our conversation about preparing in the event of a natural disaster. What should you do about your insurance? My guest is Joy Hatchett, Deputy Commissioner at the Maryland Insurance Administration. Before the break, Joy, we were talking about if an insurer decides for example, in the state of Maryland, that they are going to stop insuring homes because of the threat of natural disasters. Please continue your point.
So let's say, as I indicated, the insurance company, because of the risk, decides we can no longer write that risk. They will file an application to withdraw, and we would review that. And if we determined that what they were asking was appropriate, then they would send a notice to all of their policyholders, giving them options. They can either go to this company or that company or whatever. So that's if a company decides we no longer want to write this particular business. Now, there may be instances where a specific consumer no longer meets the company's underwriting guidelines. For example, if you've had too many claims, or if your home, you have a railing, they've inspected the home, they've told you to fix that railing, you don't want to fix that railing, the insurance company says you don't meet our specific guidelines, we are not going to renew your policy. Once again, they would have to send you a notice, but that's specific to you. Now, here's the thing, and this is why it's one thing if the company withdraws from the market. That's not on you. You're going to be able to find additional coverage relatively easily. If the company chooses not to renew you because of claims or your home doesn't meet their underwriting guidelines, it may be difficult for you to find another policy. So if you get a notice that you need to repair that railing, I would advise repair that railing. But if you get a notice and it has this whole list of things that you need to do to fix your home, and you say, there's no way that I can afford to do all that, don't ignore the notice. Write to the company, call the company and say, can we agree that in January, I'm going to do X. In February, I'm going to do this, so that they don't non-renew you. Stay with that company. Try to find another company before they drop you. Once you're dropped, finding another company to cover you is difficult.
So on that point, because I know if you own a car and you are paying monthly payments to a financial institution, a bank, what have you, if you, for whatever reason, lose car insurance, that lender will attach its own. Is that applicable to a homeowner who's paying
Absolutely. The bank, it's called forced place insurance. And what the bank/lender is doing is they're finding an insurance policy that takes care of their investment. So let's say you owe $100,000 more. They're going to find a policy that takes care of, make sure that their money is protected, but your stuff, that's not their concern. And that policy, as a general rule, is going to cost you more than what you would pay for a regular homeowner's policy. So it's in your best interest. If you end up in a situation with force-placed insurance, look immediately to find other insurance. And there's something in Maryland called the JIA, Joint Insurance Association. And they, as a general rule, will provide a homeowner that can't find insurance in other places with insurance.
I want to go back to what you were talking about regarding repairs to your home. Whether you get a notice or not, let us just say that that is not an issue where you have not interacted with your homeowner's insurance and they've not given you a list of things. However, if you have made major improvements to your home, whether it be I don't know, whether you put a new HVAC system in, whether you have put a new roof on, any major improvement, what does that mean to you for your homeowner's insurance? And we know that if you put a new roof on, brand new roof, it's going to increase the value of your house. But as it relates to your insurance, because of that, should you expect your insurance to go up or down if you tell your homeowner's insurance that you have made these improvements?
So there are different kinds of improvements. So with the roof, remember I talked about deductibles. Telling the insurance company that you've got a brand new roof is a great thing because that'll make sure that if you have a loss, they will pay to replace, because you're not worried any longer about having a 30-year-old roof.
Mm-hmm.
But the major improvement that you could do that might increase your premium, let's say you add on a deck. Or because what that deck is that's an addition. And if that deck is destroyed or lost, the insurance company's got to pay out more. So you want to make sure that you've got an insurance policy that covers that deck. So they can't say, well, we never knew you had a deck. And so instead of your home being worth $300,000, because you got this fancy enclosed deck that's now made your home worth $350,000, we're not going to pay that extra $50,000 because you only had coverage for $300,000. So those types of additions, or let's say you totally do a redo of your kitchen. Before you had a basic kitchen with tile and, general what counters. Now you've got marble counters, a double oven. I mean, you spent some big bucks. Insurance company needs to know that. So if you have a claim, fire burns the entire kitchen down, those marble counters are worth a whole lot more than the basic counters.
Would that increase your insurance
premium? Absolutely. It will. And that's the reason most people don't want to tell.
I see. Interesting.
So that's the chances you don't tell. You may not, when it comes time to file that claim, get paid.
So let me see if I can break this down for our listeners. Improvements are one thing, but repairs is another. So you want to keep your home repaired so it doesn't fall down, but additions, I should say, versus repairs could make the difference between an increased premium or not.
I mean, and think of it this way. The additions / improvements, does that increase significantly the cost to rebuild my home?
Mm-hmm.
Think of it that way, because that's at the end of the day what the insurance, if you have a replacement cost policy, what the insurance company is required to do, if there's a covered loss, they have to pay to replace your home up to policy limits. So if your policy limits are $300,000, that's all they're going to pay. And if it costs you $350,000 to replace your home, that other $50,000 is on you.
Yeah. I do want to go back to the natural disaster issue. I'm sure you've heard, I guess 2 or 3 days ago, there was a small earthquake in Virginia, in Henrico County. And whether it's earthquake, fire, what have you, can you give me a definition? Because we see this in policies all the time. What is the definition of an act of God?
Many things, I don't focus that much on that particular term because many things are an act of God. I mean, what people should focus on when it comes to their policy is the peril. So and different perils are covered and some perils are excluded. The peril of flooding, generally speaking, and if you think about it, rain is an act of God. Generally speaking, flooding's not covered under most homeowners policies.
Unless you have a separate
flood insurance policy.
Right.
The wind that blows, that's an act of God. But generally speaking, under traditional policies, the peril of wind is covered. So don't think of those terms so much. Think of the peril. Wind, hail, rain, earthquakes. Looking at the policy to see if that particular peril is covered, if that helps at all.
So again, and I don't want to forget about people who rent. And we've talked about rental insurance before. So if I'm renting, if I live in an apartment building and I have other renters above me, below me, left and right, if I don't have renter's insurance, but they do, and something happens, maybe there's a small fire in their unit that causes damage in mine. If I don't have renter's insurance, but they do, would I be covered?
No, unless there was proof that they specifically, their actions caused the fire. And that is very difficult to prove. And even if their actions caused the fire, if their action was arson, generally their actions would not provide you coverage. In order for you to have coverage, you need your own renter's insurance policy. And folks should also not think that the landlord is going to be responsible for the loss either. And fire is one of the biggest reasons that renters have damage.
It's just, this is a really cumbersome and complicated situation, because when you're looking at what happens in California, and I know you're certainly not a California expert, but we are talking about, as of last week, $55 billion. And that was just last week. But gosh, how can any insurance, private company, or state organization afford to make these people whole?
So And this is going to get into the technical stuff.
Okay.
Insurance companies buy insurance just to cover natural disasters. It's something called reinsurance. And so for this loss, those California insurers have purchased policies, and usually these are major multinational companies that they have bought reinsurance from. And those companies basically will pay the State Farms and the whatevers a portion of their loss. And that cost of reinsurance is one of the reasons that our insurance premiums may go up, because the more expensive it is and the more difficult it is for a private insurance company to get reinsurance, that's one of the factors that plays into how much we individually, even though we're here in Maryland, may end up having to pay for our policies. I mean, it's just one of those complicated things that happens in the insurance world.
In a circumstance where your house burns down, God forbid, when you file a claim, kind of walk us through what happens. I think all of us who are homeowners may have had a chance to file a claim, but kind of walk us through it, because a lot of them are saying you can do it on an app, what have you. This is really convenient, but for the critical thinker that I am, if I'm not talking to a real person, particularly when you're talking about such a humongous loss, what are the dangers of just going through this process? What are the pitfalls, maybe I should say?
So the first thing that I would do is get in touch with the insurance company and say to them, just had this major loss, want to give you notice, want to give you the opportunity to come out and inspect. These are the things that I'm going to do. I am going to secure my property to the extent that I can. I am going to take pictures of everything right now so that if there's ever a question, you can see the condition of my property. And I am not going to do anything to repair the property until you've had the chance to come out and see it. And here is all of my contact information, because if I can't be at the home, here's a cell phone, here's the other address, so that you can get in touch with me. And if you have any paperwork that you need me to send back to you, provide that to me. Here's my email address or whatever, and give me my claim number. All of that should be conversation one. And that you as a consumer should be taking notes throughout conversation one. Then you've got that inventory that you've made and you have access to. You take that inventory and you start making the list of what's damaged. And you, if necessary, if you need a contractor to come out and do repairs, see if you can get several contractors to assist you and give you estimates. Now, if you're dealing with a contractor and you're in the state of Maryland, you want a contractor that is licensed with the Maryland Home Improvement Commission.
Okay.
Because if something goes wrong, you don't want cousin Joey that's not licensed and you can't find him once you've given him a whole lot of money. You want somebody that you know is going to do the work, and that if you have issues, you go back to the Maryland Home Improvement Commission and they can make sure you get your money back.
Mm-hmm. Mm.
And that claims process, I would tell people go it, because there's multiple things you need to do. Look at our website, and that will give you all the steps and all the guidelines. And if you get stuck, give us a call, and one of our folks will help you through the process.
What's your website?
It's marylandinsurance.gov, or just Google Maryland Insurance Administration, and we'll come up, and just you'll be able to see all kinds of information about how we can help, videos and all of that.
If you filed a claim and it is denied, and let's say there's a major claim, I'm sure that there may be an opportunity for you to dispute that decision with the insurance company or appeal it. But to me, using common sense here, if the person who tells you no the first time, what's to prevent them from just, saying, okay, hold on, and make you wait a day and then tell you no again, because you don't know what's going on behind the scenes?
They can file a complaint with us. And what we do is we will review what the insurance company has done.
Mm-hmm.
We'll explain it to you, but also if what the insurance company has done is not in accordance with Maryland law, we have the authority to require that they pay a claim. But sometimes it's just a matter of not understanding or insurance company not getting back to you. Remember, we are the ones that license them. So they may not call you back, but they're going to call us back. So just go to our website, file a complaint with us, and we've got 2 different ways. You can go through our rapid response program. Not every company participates, but what we'll try to do is get things moved, especially if it's a lack of communication. Our rapid response program will quickly look at that. But if it's something more major, then you'll end up in the formal complaint process, where we pull all of the records and do a thorough investigation. The problem with the longer is the formal process, it takes longer. Rapid response, we can usually get that resolved in about a week or so. Depending on the complexity of a bigger complaint, it could take months to get through it.
What are the most common reasons why a claim may be denied, and how can homeowners avoid that?
So one thing I hear all the time is they wanted to come into my house and look at my property. Of course they did. It's under the terms of the contract.
Mm-hmm.
If the insurance company says they need to come in, let them in. You have every right to be there, but let them in. Another big thing we see, especially with personal property, somebody says, well, my clothes, I had a water sewer backup and my clothes got wet, so I threw them out. You threw them out before the insurance company even had a chance to look at them. A lot of your clothes and things of that nature can be washed or dry cleaned. And if they can't be, then replace them. But don't just go and throw stuff out. Sometimes it's a problem with the scope. You may say that these 3 rooms were damaged, and the insurance company only says 2 rooms. So that's an issue with the scope. And we would come in and, well, we don't go out, but we would look at all the paperwork and to see where the dispute lies. So there could be many, many things, but a lot of times it's just you've got two sides and they're not properly communicating. And that, I would say, is frequently the problem. Also, sometimes it's because the consumer doesn't understand the terms of their policy. They don't understand necessarily, or they don't like the deductible, or there's a disagreement about whether it's a covered loss. I mean, even though I don't know how many times I've been on your show and I talked about flooding is not covered, we still have people that insist flooding is covered. It's right there in the terms of the policy. But we try to walk consumers through those basic things.
Final thoughts about homeowners insurance when you look at what's happening in California, because I'm sure that your department, even though that's on the other side of the country, that you're watching this situation carefully.
We are, just because in general we're concerned about the insurance market and the availability of insurance, especially if it looks like it's going to impact reinsurance. Because if it impacts reinsurance, it very well may impact the rates here in Maryland. So we're watching that very closely. Also, always, and this is a horrible thing to say, the scams.
Yeah.
Because it's a way.
Yeah.
The more that we can learn, because the scams, they're going to, if they try it in California and they're successful with it, at some point they're going to try it here in Maryland. So you watch and you learn so that you can prepare your consumers for things that they need to watch out for here in Maryland.
I think that's a really, really good point to end this conversation on. Joy Hachette, Deputy Commissioner at the Maryland Insurance Administration. Always good to have you on the program. I always learn something, and I hope our listeners do as well. Thank you so much.
Thank you, and have a good day.
That is the Daily Drum for this Thursday, January 16th, 2025. I'm Harold Fisher.